Well, good evening, everybody. Welcome back to Strongman Personal Finance. We got a sponsored video where we're going to cover Marathon Digital Holdings. What is this company all about? Well, I went to their website, and I'm not joking. I went to their website, and I clicked on investors. The link is broken, and I got a notification from my malware detection software that something tried to hack my computer. This is what I get for going to a website that has cryptocurrency. They're probably trying to install some crypto crap on my computer. Freaking losers. So I'm not even going to this website. I apologize. But anyway, let's read about Marathon Digital, because apparently it's a publicly traded company. Marathon Digital Holdings Incorporated operates as a digital asset technology company that mines digital assets with a focus on the blockchain ecosystem and the generation of digital assets in the United States. Now, if you know Strongman Personal Finance, okay, do you think I like this? Do you think I'm going to recommend this stock? Well, I won't recommend any stock, but do you think I'm going to like this? We'll see. And there's actually an article I guess we can look at here. I'm just scared to go to their website. I apologize. I clicked on a link and I got like a virus detection alert. Probably my computer has AIDS. Okay, so basically it's a crypto mining company. Now, they just announced their third quarter results. Let's go ahead and read this article. The company recorded a net income of $64.1 million during the 3 months ended September 30th, compared to a net loss in the same period last year. Revenues were $97 million. So wow, that's a lot of net income on revenues. I'm wondering if that was some kind of one-time charge or some kind of weird accounting thing. I'm just scared to click on their website to actually pull up their financial report. Okay. Revenues were $97.8 million, significantly above third quarter 2022 revenues of $12 million. So right off the bat, we can see exactly what this is. This is a boom and bust company. This company basically just follows the whims of the crypto industry. When Bitcoin is going up and everybody's buying it and everybody's going to 20,000x and Andre Geek is shoving a coin up as you know what, okay, I'm sure this company is going to have crazy revenue. Everybody's suddenly interested in, Bitcoin, oh my God. And when Bitcoin is crashing and all the other cryptos are crashing and nobody cares about it anymore, this company probably gets absolutely wrecked. Okay, we can clearly see this is a highly volatile company. This is basically crypto. Basically. I mean, is that what you want it? You can't do a DCF of a company like this, I can tell you that. This thing is just going to go everywhere based on cryptocurrency. So, let's see. So the revenues were up as a 467 increase in Bitcoin production was amplified by 32% higher average Bitcoin prices during the current year period. So I'm sure the higher that Bitcoin goes, the more people get invested in mining. Because, I can mine Bitcoin, and when I get a Bitcoin for processing blockchain transactions, then, oh my God, I will have so much money. So it's boom and bust. Gains on digital assets were $37.1 million, as the company sold 66% of the Bitcoin produced in the quarter to fund operating costs. Okay. That's probably where a big part of their profit came from. Okay, I mean, obviously, they had net income of $64 million. A big part of it was they sold crypto at a gain. Realized gains were partially offset by higher impairments in the carrying value of digital assets. So, while they realized the gain on sale, because they had a low cost basis, they also had to write down the value of the asset. So basically, it seems like the Bitcoin went down during this quarter, and then they sold it. But when they sold it, it was still a gain because they had initially purchased it, I don't know, much lower price. I don't know exactly what happened, okay? But they're still impairing digital assets, which means they're writing down the value of the Bitcoin. Okay. This quarter also uniquely benefited from an $82.6 million gain from the extinguishment of debt, while the year-ago period included a $29 million gain on the sale of equipment. Okay, so they're profitable because they basically paid off debt. That's not a core business function. This is still a money-losing company, okay? These one-time charges, you almost have to, exclude them. I mean, they're legitimate gains and losses, right? They paid off debt, and I guess they paid off a lot less than they owed, probably because they probably redeemed it on the market and the value of the debt was probably lower. I don't know exactly what they did, but they basically had a huge gain from buying back debt. They paid off some of their debt. And like I said, the debt was probably just trading lower because of higher interest rates. Interest rates go up, bond prices go down, et cetera, et cetera. But this is just a gain on debt. This is not a core business function. So they had net income. They had a profit of $64 million, but that's all from basically like one-time things. Wow. Okay. Adjusted EBITDA, garbage, completely garbage. Let's see, how much Bitcoin have they produced? Oh my God. They're going insane with Bitcoin. Look at that. So they produced 3,490 Bitcoins in Q3 of 2023 compared to 616 the year prior. They're ramping up production. I'll give them that. Holy freaking crap. 37 Bitcoins per day. Wow. I wonder how much money that's going to be if Bitcoin crashes. Oh, we mine 37 Bitcoins a day and they're worth 0.001 cent like Shiba Inu. All right, here's management. Blah, 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 blah. Okay, so I keep hearing about this Bitcoin halving. Oh my God, Bitcoin's going to halve. And I guess that's like bullish for Bitcoin. Everybody's going to make so much money because the Bitcoin halving, Bitcoin goes crazy. Well, if everybody knows that there's going to be a halving and it's already priced in, like why would there be a gain? But whatever, okay? So that was basically a summary of their earnings. This is an unprofitable company. Now, let's look at it in a little bit more detail. We'll look at the overall financials. So first, we got a market cap of $2 billion on revenue of $259 million. That's pretty pricey, okay? Net income of negative $371 million trailing. So their net income, their loss over the last 12 months is higher than their revenue. Shares outstanding, I'm sure that's going up. Negative earnings per share and a forward PE, which is just a guess, okay? We got a price target of 11. Let's see how much the stock has fluctuated. Look at this, okay? This is like Bitcoin. This is just basically buying Bitcoin, okay? So I think the reason this guy is interested in this is because, you sit there and you're like, oh, well, the last time Bitcoin rallied, this stock went absolutely bananas. B is bananas. And he's probably thinking, you know what? It might do that again, so I'm just going to do a small speculative bet. And that's okay. If you want to do a small speculative bet, you do whatever you want with your money. Okay, I don't like to gamble on stocks like this. But if it's just a couple $100 and it's not a big deal, okay. But I would not put like all of my portfolio in this. This is massively unprofitable, highly volatile garbage. It's what it is. It's a Bitcoin miner. Okay, this thing trades on the whims of Bitcoin. You want to put your fortunes on Bitcoin? I mean, look at this volatility. It's insane. Okay. But it outperformed VT, so it's better. Oh, okay. So let's look at the quarterly revenues. All over the freaking place. Look at that. Look how revenue just goes up and down and up. Like, that's crazy. This thing it's Bitcoin. Gross profit, negative gross profit. Okay, wow. So the cost to mine the Bitcoin is more than they're getting from is more than the Bitcoins they're getting rewarded for the mining. Negative operating, basically losing money every single quarter. Shares outstanding, massive dilution. Oh my God. So they got negative gross margins, negative operating margins, randomly one-time profit margin because of extinguishing debt. Let's see how much cash they're burning. Okay, they have massive negative operating cash flows every single quarter. Wow. Oh, and they're just surviving by share issuance. Look at that. And issuing a lot of debt. I mean, they paid off some of it looks like, from that gain they got, but they've been packing on debt and issuing shares. That's massive dilution. What is their balance sheet? Do they have positive equity? Well, they at least have positive equity. Why? Because they've issued common stock. Their total lifetime profits are negative $802 million. And that's massively accelerated over the last year and a half. Like, this is not good. Okay, they got long-term debt of $325 million. Well, they're not doing that bad when it comes to long-term debt versus long-term assets. I'll give them that. Let's see. Total current assets of 432 versus... Okay, so their balance sheet's fine. Like, at least so far. Their balance sheet seems pretty solid. They have a ton of cash. And while they're burning it at a decent clip, I mean, I think they're going to be fine in the short term. But in the long run, a company that is massively unprofitable and share diluting and has negative cash flows, it happens every time. they eventually go to zero. If this doesn't change, this company will go bankrupt. Guaranteed. Because, I mean, how long can people just keep throwing money at this company by letting them issue more shares? And they just keep losing money with negative gross margins. I don't know. So this is purely a speculative gamble. That's all it should be treated as. If you go all in this, I bid your cheeks adieu. Okay? All right. Have a wonderful day. Cheers.